Cool.
Maxharris.
Jono.
Good to see you, mate.
Thanks, mate.
Thanks for joining us on episode 2 of the Keeping It Real Estate podcast.
No, I saw the first one, big fan.
Yeah, what'd you think?
Mate, it was very entertaining, firstly.
Yeah.
Very interesting as well. I thought you both had some really insightful knowledge into the market at the moment as well.
Cool. Yeah.
It's exciting to see what this is going to take.
Yeah, mate. Well, thanks for coming on, guest number 2. So, like I said, in the last one, wanting to sort of just run it once a week and aiming next week to maybe, have an auctioneer or something like that on and just, give different insights to, different things that we do and some value. And some value that might help some people out there. But you're obviously a mortgage broker for Azura Financial. How did we meet?
Yeah, I think it was about 3 years ago now, wasn't it?
Yeah, roughly, getting close to that, yeah.
So I think I would have initially probably just cold called you. I think that's how I introduce or meet with most of my agents or contacts, and I think I offered to help you out by standing on your door, open inspection, take some names.
Yep.
It's a great way for me to obviously offer my services to you, assist on that front. Also really good for me to meet some buyers as well.
Yeah.
Obviously on the front lines, that's where all the buyers tend to be.
Well, one of your owners used to do that with me years ago. Tom Hawley. He was one of our same thing. He was a junior getting started, and he started doing on the door stuff and taking names and getting to meet people, and look where he is now.
Exactly. It's the best way to build your business.
Yeah.
I mean, you have to be proactive on the front lines, give up your own time, of course. Not only does it help foster the relationship with the agent, of course, which is where we generate most of our inquiry from, but it also is a great way to actually put a face to the name and meet some real people, some buyers, and hopefully we can do one or two things, assist you finance or get a person, a potential buyer, finance approved to then bid on your property, but also help educate potential buyers around what other options there may be, because I think that these days people are, too not lazy, but they're probably not aware that there are other options outside of their
maybe time poor as well.
Major banks, yeah, exactly.
Time poor, and that's where then you guys can come in, and we'll get into that. Like the things that you do, and how you can, save, buyers a lot of time and sellers, who may be refinancing for a purchase or whatever it is. But yeah, just coming back to what you were saying, obviously, I think there's a lot of value in it. I find a lot of value in having you at the open homes for myself as an agent, because what it does is it takes away having to have a conversation with a potential buyer about finance, because obviously I'm a real estate agent, not a mortgage broker, so I have some information, which a lot of it comes from you and our discussions, but it eliminates me having to take any time away from discussing the property with the potential buyers, which I think is, it's a big thing for our vendors. And then also then having an expert there that I can say, look, any other information you want to know, Max is either at the door, he's downstairs, go and speak to Max and he can give you some really sound advice, because I think one of the things that you and I see commonly at open homes, and again, we'll talk about that later on, is buyers, especially a lot of first home buyers who may not be educated in the process, and coming through the open homes and start talking about making an offer or bidding at auction when they don't actually have a pre-approval in place.
Absolutely.
So I think the point of difference, I think for us too, having you there for any potential vendors too is huge, because it just gives that extra bit of advice and probably, I don't know, what would you call it, comfort level or just support to the buyer, to give them some confidence to say, okay, well, after a quick chat with you, you can kind of say, well, based on what you're telling me, I can do this for you. Is that right?
Absolutely. I can't remember the amount of times this has happened where somebody either walks through who's not finance approved and has this misconception that it's a hugely laborious task, or it takes 2 to 3 to 4 weeks sort of thing. And then, me being present at the open for inspection, I can hit those misconceptions on the head straight away. And then most of the time what ends up happening is we organise a meeting the following week with that buyer. I educate them around the actual process, and I can very quickly tell them, based off what you've told me, X, Y, Z, you can easily purchase up to, this amount. and borrow X amount.
Yeah.
And that not only gives them confidence to then go forward and initiate an application, but also proceed with the property that they're potentially looking at buying from you. So, and then, you know, also for the people who aren't approved yet, but then also for the people who come through a property and they think that, well, they've heard, say, a myth or an old wives' tale about something about, you know, small properties or properties that you know, are less than 40 internal square meters, or maybe company type.
There's a whole lot of
properties.
different,
There's all these different security types.
Or high density, medium density, all of that type of stuff.
All those sort of things, and they go in there with this conception that, oh, I can't buy this property. Me being there can easily say yes, no, yes, no. Just alleviate all those potential concerns which holds back buyers.
And that's the benefit of a mortgage broker having access to a number of lenders, because it is something that I hear regularly is, you know, a buyer might be dealing with the bank they've been dealing with for however long they've banked with them for, and that particular bank may say in a certain postcode that it's high density, you know, and especially myself doing a lot of Waterloo, Zetland, Wooleye Creek, high apartment level, you know, there's probably 90 to 95% of those suburbs are apartments.
Absolutely.
And they may speak to their bank directly and the bank says, well, sorry, that's a high density area, so we can't loan you there. But technically, they're talking to one lender out of how many?
Exactly. So, yeah, I deal as an independent mortgage broker. I deal with about 30 or 35 lenders, and that includes obviously all your majors, all your second-tier lenders like your Suncorps, IMGs, Bank West, but also as well your credit unions and online banks as well.
Okay.
So when you're speaking to me, it is like indirectly speaking with 30 to 35 different lenders.
But you're speaking to one person.
Exactly. Correct.
Who's doing all the groundwork.
Exactly. So I'm the one, you know, I'm familiar with each of the lender's credit policy. So just coming back to your scenario, I suppose, if you remember John Briggs for the purchase in Wooleye Creek, he was approved with, I think it was CBA at the time, and they did have a postcode restriction. I think they're limited to 90% on that specific property you were selling, but we were able to look at another lender, I think at the time it was Bank West, who was able to go up to 98%, which meant he could then follow through
to
purchase the property. So because he was only dealing with CBA, he thought straight away, crap, well, no one will lend me the money over 90%, but you know, having met him at the open, I could obviously educate him and say, look, Bank West and a couple of other options are viable in this scenario, and we were lucky enough to help him get the purchase across the line.
Well, it's funny you bring him up. I run into him a bit out there, and he every now and then mentions, he's like, thanks so much for putting me in touch, because we wouldn't have been able to buy here, and you know, there was something else we would have probably bought that wasn't quite to what we wanted. So that's obviously, you know, another huge benefit of working with a broker. But we've got a couple of really good case studies we can discuss later, which I think a lot of people can relate, like might be able to relate to, who are watching this, where they might be in similar situations, depending on, you know, employment and different lending criteria, which you touched on briefly. But yeah, what do you make in general? What are you seeing out there at the moment? Obviously, I've seen a shift in the market in the last basically since the election. You know, there's been a huge shift. We've had a couple of rate cuts as well. So from a finance perspective, what are you seeing?
It's a really good question. I think the last 12 months has been pretty much two completely converse markets. The first half of the year, as I said, pre-election, it was all doom and gloom. You know, I think we were slipping about 1% each month, just in terms of property prices. Mortgage applications in general were down significantly. I think investor loans were down, you know, close to 10% year on year. But as the election hit, you know, the Liberal government pulled off a miraculous victory somehow, which also coincided with the first two rate cuts in over 22 months, I believe. So, and they
were back-to-back months, weren't they?
Back-to-back, June, July. And at the same time, I don't know if this was all one big coincidence, but APRA as well, which is the mortgage regulator.
That's right.
They announced a major change in how they assess loans. So previously they were assessing loans or stress testing the new loans repayments at an interest rate of 7.25. What they said was, we'll scrap that and we'll make it based off the actual rate that the borrower is paying. So at the moment it's about 3 to 3.2%. plus 2.5%. So we've gone from an assessment rate of 7.25 down to, you know, 5.65, 5.75.
Okay.
which is
So
meant
it's, almost between 1.5%-2%.
it's huge.
So how does that change? Let's say
in layman's terms.
yeah. So if I was looking at an $800,000 borrowing capacity and then that term changed, then what would I be able to borrow?
So it was about a 15 to 20% increase in
Oh,
borrowing
wow.
costs
Okay.
across the board, and
Right.
that happened overnight.
Yeah,
So
okay.
as you can imagine, what that did was all these buyers who were sitting on the fence waiting for the property market to bottom out, that opportunistically jump in. They've seen all these changes. They've had a couple of rate cuts. They've flooded back into the market, and as you would know, stock has remained low. Buyers are back in the market.
Yeah, definitely.
Mortgage applications shot up through the roof, especially first home buyers, and now we're starting to see investors as well.
So they're coming back into the marketplace now. Okay.
Definitely. And mortgage applications all of a sudden got a whole lot easier because, borrowing capacities have increased significantly. So people who were previously buying, as you said, at 800k purchase price, they're up at 900, 950.
Yeah.
So that just opens up so many more properties to potential buyers.
Absolutely. Yeah.
And then on that as well, so we're still just looking at the mortgage market in general. So I think there's a lot of misconception out there at the moment that banks are, just being meticulous with their assessment. People are very worried about handing or submitting an application where the bank's going to look over their transactional statements.
Which was happening for a large portion of this year, right?
Very much so.
There was huge scrutiny on, eating out all those sort of extra luxuries that you were having, which was, correct me if I'm wrong, that was affecting applications?
It definitely was, but I must say the media overhyped it completely.
Okay.
So the Royal Commission happened about 12 months prior to the federal election, and they came out and pretty much recommended no changes to the way they scrutinised an application, which was a big shock to the market because they were at the halfway point. They came out and said, the revision of living expenses is ridiculous. We're using a benchmark where we should be looking at day-to-day transactional statements. So lenders went out and saw that, and they made all these changes expecting that to be implemented across the board. But when the final report came out, they made no changes to living expenses, and they would say, we're happy with using the benchmark living expense. Mm-hmm. So now what we're starting to see is lenders wind those revision of living expenses back. So still only 50% or even a little bit less don't even want to see your day-to-day living transactional accounts.
Okay.
So people who are worried about, I spend way too much on a night out or too many dinners each week, there are lenders out there who don't even bother with that, and they'll just rely on based off what you've submitted. So there is a bit of a misconception there.
Yeah.
And lenders are definitely starting to lend more and look less at the small, finer details of why they could potentially decline and look to reasons why they should approve the application, which is really positive for the market.
That's good. Yeah, that's definitely good. So for the process from, first home buyer ideally is, well, not necessarily just a first home buyer, but, somebody looking to buy before, ideally before they even go and start looking, it's obviously advisable to have that pre-approval in place. It's something we see quite a lot, and I touched on at the start is, buyers coming through and saying they want to put an offer into a property, but they haven't actually, my next question to that person is, have you got your pre-approval in place? Because that's something I need to obviously relay to the vendor, because when they're seeing offers, they obviously need to know that person is finance ready. And one of the common things we often, that we probably, I know I do and yourself get responded to is, it's okay, I've got a big deposit, so I won't have a problem getting finance, and that's not always the case, right?
No, it's not. So what people don't understand is there's two key facets to an application. There's the deposit side, and then there's also the serviceability side. So you need to tick both boxes. So in your case, where someone's got a big chunky deposit, that's great. The bank does like to see that, but you also need to be able to show that you can actually make the repayments on the proposed loan. So that means, if you're a PAYG employee, showing a couple different pay slips. If you're self-employed, sometimes we'll need to show 2 years individual tax returns, company returns. There are some lenders who will just look at 1 year's, but that's why, being pigeonholed to one bank may work against you, because some lenders will have a different appetite for different types of income. For instance, if you're on probation, as a new employee. Some banks don't even want to touch it.
Okay. Yeah.
Whereas some banks will take it from day one. So it is really important. As a broker, the first thing we do as part of our process is we have a very high level conversation with the applicant, get an understanding of their employment history, how much they're earning, what's their deposit size, all those sort of things. And just based off a 5-minute conversation, we can come back to them with an assessment on their borrowing capacity, how much they can purchase for, estimate of the costs involved with purchasing. So that also includes a couple of different spreadsheets, just showing, if you were to purchase at X or a Y, this is what the ongoing repayments look like.
Yeah.
So we help them work out their exact purchase price that they want to go for.
And that's in a 5 to 10 minute conversation over the phone.
Yeah, so I'll get the info over the phone.
Yeah.
And then I'd more than likely either come back to them via email with a pretty detailed proposal, or arrange a face-to-face meeting and go through everything with them.
And that's all obligation free. It's a free service.
So the banks pay us for the work that we do in full.
Yeah.
A lot of people have a misconception that, we charge them either a direct fee or potentially by cutting out the broker, they can save on their interest rate or fees. But no, so the service that we provide is completely free of charge.
Yeah.
And there's never any obligation to proceed with the options that we put forward. So off that 5-minute conversation, I come back to them with that info, and I'll also come back to them with a comparison of 4 to 5 of the most competitive lenders that more importantly fit their needs. And
I think that's the key. Obviously, the 5-10 minute conversation, the free service is great, but opening up to multiple lenders, because like you've just said, different banks assess depending on employment, depending on location of the property, depending on your debt, all of those type of things. Different lenders have different criteria, right?
Yep, everybody kind of thinks that, it's just based off the rate. But no, so each lender has a different appetite for, every different scenario. So, if you're to walk into a CBA branch, right now they're very good at new employment. ANZ, for instance, they're not so great at new employment. Probation periods they tend to shy away from. St George has actually just recently changed their policy where they were relying on 1 year's self-employed tax returns. Now they've pushed it back to 2 years and they want to average the income.
Okay.
So the mortgage market, long story short, is changing all the time. Credit policy is updated, very frequently.
Mm-hmm.
So as a retail punter, trying to stay on top of all that, it's almost impossible.
It is, yeah.
So not only will you shoot yourself in the foot by potentially lodging an application that won't be approved, you'll also waste so much time trying to do all the research yourself. Whereas, have a chat with a broker, a good broker, should know all these things off the bat, just be able to point you in the right direction, hold your hand.
So the time that you can obviously save someone, like you're just talking about lodging the application, if the average person was going to go do it themselves. So you do all of that, right? You have your initial conversation, and then what happens from there?
Yeah, so that initial chat gives me all the info. I go back to the client with a proposal. We then discuss which bank's going to be the best fit for the pre-approval. Mm-hmm. Keeping in mind, pre-approval is just that. There's no cost involved to get it in place with either myself or the bank, and there's also no obligation to proceed. Okay, so once we decide on the pre-approval, we essentially submit to the bank their supporting documents, including if they're a PAYG employee, the latest couple of pay slips, some bank statements showing that they've got the funds to complete, the difference between purchase price and loan amount, ID, all the sort of normal documents that make up part of the application. But more importantly, I actually manage it for them. So I collect it, I submit it to the bank, and I make sure it gets approved.
Yeah.
That's much easier for the client because the client doesn't have to explain their situation to the bank. They tell me, I put it in a nice presentable manner to the bank the way they like to see it, which obviously increases the likelihood that it gets approved. Okay. And it also means that the client themselves only has to liaise with myself. They don't have to worry about talking to Tom, Sally or Harry, whoever's working at the branch that day, and try and pick up the pieces every time. So from a process point of view, it's much easier for the bank. Yeah. And then just fast forward, once that application is approved, a pre-approval will last for 3 months. In some cases 6 months with a couple of lenders. The client, it's then over to them. They go out and find the property that they want to purchase. Obviously, once offer is accepted, the important thing to keep in mind is because I have access to 30 different lenders, my job isn't just finished once they're purchased. So let's just say we get the pre-approval in place with CBA, and then when they purchase, might be 3 months later, interest rates would have likely changed between pre-approval and purchase. So I have to come back to my clients with another full market comparison, and it may make sense at the time to lodge with a more competitive lender. It might be Virgin Money, or it might be Bank West.
Yeah.
So we can run the numbers and see if it's going to be worthwhile to lodge another application.
Okay.
So yeah, and then client's perspective, they're only dealing with me. They don't have to do the legwork again, and the process, I suppose, picks up at that point.
So some of the, like you just mentioned, Virgin Money, Bank West. I know there's been some others that you've mentioned to me before that you've taken clients to. I think there was one called Pepper Money.
Yep.
And you know, some of these other what you would refer to as third, they call them like second and third
tier
like
lenders. A specialist lender.
Yeah.
Third tier lenders.
And the average person doesn't have access to those lenders, right?
Yeah, exactly right. So the bigger names a client can call directly and arrange an application, but there are some smaller names like First Mac.
That's another one that
that have specialties that they more or less target. So whether it's an investor with a lot of debt, they can look at taking the actual repayments on an existing mortgage, which has the, I suppose it increases their borrowing capacity significantly. So, your average borrower wouldn't know each lender's specialties, let alone have access to them, because a lot of these lenders do actually only deal directly with brokers.
Yeah.
Because they understand that, if we open the doors to everyone, we'd receive applications that are not what we want to deal with.
Yeah.
So they only deal with brokers.
So they can often offer more competitive rates. Is that my train of thought behind that would be, they obviously don't have branches, they don't have all these overheads of having all these extra, overheads that they've got to cover. Is that sort of why they can offer these more competitive rates?
Exactly right. So if you think about it, so the major banks, they're always going to be competitive, but because of their large infrastructure networks, the branches, they've got hundreds of thousands of employees across the country, sort of thing, they have a lot higher fixed costs. So you'll find that the first tiers of majors are always about 10 to 15 basis points probably more expensive than the second tiers, like your INGs, Bank West, Suncorps, those sort of characters. And then behind those guys, there's the third tier lenders, which is the First Macs, the Peppers, the Bluestones, no branch networks again, much smaller business model. In some cases, look, if they're a specialty lender, like say a Pepper, they specialise in credit defaults, interesting and wonderful types of income. So because they're a bit more specialist, they can charge a higher rate, but they can accept different types of income, more outside the box applications. But yeah, also just back to that, typically with the first and second tier lenders, using a broker, there is some advantages in terms of fees and interest rate.
Okay.
Because of the volume of loans that we write with each of the banks and the relationship that we form with each of them, they give us access to preferential pricing and quicker turnarounds as well. So what that means is we can actually negotiate a sharper interest rate for our clients and get an application approved in a much quicker time than what they could probably do off their own accord.
Yeah, that's fantastic. One of the points you mentioned about these second and specialist lenders reminds me of one of the clients we did deal with recently who was relocating from Canberra with his partner. We'll call him Tom. Was relocating from Canberra with his partner, and I showed them a couple of properties in Botany. New builds, good value, based on their budget that they had a pre-approval with their bank that they had been banking with for some time. They had a verbal pre-approval. They were in the process of selling their home in Canberra. It was on the market. And based on all of that information and the estimated sale price, they had a certain budget. So they contacted me. I showed them through some properties in Botany. I actually met them in Waterloo. They came and had a look at a property in Waterloo. I took them to Botany for a bit more bang for buck. And then they spent some time with their friends in a different part of Sydney over the north side and decided that's where they wanted to live. Based on the property prices in that area, it was a bit out of their reach. Now, Tom was he was employed but he also had a large commission component of his salary, so it wasn't a straightforward sort of application. And just explain what you were able to do there and the process of what happened there.
So yeah, really good example. He had a verbal approval with his existing bank where he had his existing mortgage. I think he had a good relationship with his branch manager along those lines. So we didn't even think outside of his local.
Which happens a lot.
Which happens a lot. Yeah, exactly. He was a sales BDM, so it meant he had base wage plus a lot of commission. The bank that he had his existing approval with only looked at 60% of his commission income, meaning they shaded 40% off it, which obviously has a drastic,
huge,
effect on your borrowing capacity.
Because it's your income.
Yeah, exactly. And,
you're still getting that 40%.
Like an agent, commission forms a massive part of his income. So it meant that his borrowing capacity was severely hampered. But I was obviously aware of the fact that he had earned a large commission, so I went with a bank that I think it was First Mac at the time that allowed us to use 100% of his commission as long as we could show some consistency, which he had no problem doing. So that meant that we could increase his approval up to where he needed to buy. I think he ended up buying in Longueville for a much higher purchase price than what he initially thought.
Yeah.
And it's still to this day one of my best clients, to be honest.
And so you were able to increase his borrowing capacity by a significant amount just by making that adjustment?
I think it was over 100k in the end. Jumping from 60% commission to 100% when it's largely commission based makes a huge impact.
Absolutely.
And it's insane that. So he had the existing approval in place with his existing bank. By lodging another approval or an application with First Mac, it didn't affect his existing approval. So that was still valid and in place. I always made that clear to him. So if he ever wanted to go back to his existing bank, he could do so. But I just gave him another option.
That's a great thing to point out. So you don't have to shift straight away from what you've currently got in place. You can explore your options without affecting.
People don't realise you can have 2 approvals, 3 approvals in place at any time. As long as you obviously just proceed with one, you'll be fine.
Okay. Now, valuations is an interesting sort of topic, which now with obviously the shift in the market and the banks being maybe loosened, I don't know if that's the right word, they're lending.
Definitely.
We're not sort of seeing as much scrutiny on the valuations, whereas sort of pre-election, valuations were consistently coming in short, even though the contract prices were coming, down significantly. The valuations were still coming in under that. So what a sort of, I suppose with valuations, you've obviously got when you're working with a mortgage broker, you've got a few options with valuations as opposed to if you're going directly with the lender.
So just initially, so with a valuation, the way it works is it's not the bank that does the valuation. The bank gets, when it's a purchase, they get the valuation request, and then they have a panel of independent valuers.
So they outsource it.
Exactly. And there's about 10 or so valuers in most metro areas. So they send out the job request, the valuer gets the job request. Now, pre-election, there was obviously a lot of media, speculation that property prices were tanking. And what that does is it actually forces the valuers to make comments about that sort of media speculation in their reports. And it passes over that negative sentiment, and what that does is has a flow-on effect on their end valuation result. So as the election came through, the Liberal government got back in, we had the rate cuts, buyers started flooding back into the market, that sentiment started to shift. And now we're seeing valuers make those comments in their VAL reports currently. So they actually say sentiment has shifted, looking positive in towards 2020, sort of those things.
Okay.
So we can actually notice that valuations are starting to come back at purchase price a whole lot more.
So you're seeing more of that. There's not.
Absolutely.
Yeah. So
which is really comforting because there's nothing more heartbreaking for a purchaser to buy and then see a short valuation. But in saying that, the benefit of working with a broker is, let's just say, I get you an approval in place with CBA. You go out and purchase for 700k. But the valuation comes in short at 680k. Rather than just saying, okay, that's that, we have to make up the difference in cash. As a broker, I have access to upfront valuations with multiple different lenders. So before I submit another application with another bank, I actually order upfront valuations straight away. Okay. This has happened a couple of times with our clients,
with some of ours, that we've worked
definitely.
together on, yeah.
And what that does is, if we can all of a sudden get 3 or 4 different values to the property, chances are one of them will give us a valuation at purchase price, which a lot of the time does happen. And then the client...
Isn't it interesting? We'll get 3 valuers through the same property, yet they've all got different, different opinions on what the property's worth, and we're all using the same comparable data, and that's obviously, as a real estate agent, how we price a property. Is we're using that same comparable data that they're using, but we can get 3 completely different prices back.
Look, a lot of the time it's what side of the bed did they wake up out of, or did they have a good breakfast, all sorts of stuff. It just depends on the mood you catch them in, I think. But we order those upfront valuations. Chances are one of them comes back at purchase price, and then the client has got 2 options. So proceed with the short val with CPA, or potentially lodge another application with the lender where the valuations come back at purchase price. So at least we can provide those 2 options.
So if the buyer was in, let's say they're in a cooling off period, right, which in a lot of the areas I sell in, that's quite common. Not so much auction, more a lot of first home buyers are going into cooling off periods, which is your 5 business days. Now, let's say we go through that process, they've got the short val with their lender. You can obviously come in as a second option if they haven't started with you, and you were saying that you can then relodge with the new value. What's the time frame on that? Because obviously people are going to say, well, no, I'm in a 5-day cooling off. I can't go and speak to somebody else because it's going to take too long. What's the process there?
So good question. So a valuation, the first thing we would do would be order that upfront valuation straight away. That will take 1 day to inspect the property, because you're going to be answering the phone, getting to it straight away. And then another day to complete the report. So we've got 2 days there. Once that report comes back, the process from lodgement to actually conditional approval, I'd say would be about 24 to 48 hours as well. So there you go. We're still within the 5 business day cooling off period.
And then look, we can, if we've got a buyer who's just trying to finalise those things as an agent, we can obviously talk to our seller and say, look, this is what's happened, and we might need to give them a couple of extra days. So just for any buyers watching this, that can also be done. It's just all about open communication, and if everybody knows what's happening, you can obviously extend that out those couple of days to finalise the deal.
I think both parties, buyer and vendor, they just want the same thing.
That's
they
right.
Want to finalise a really good deal. So if it means extending the cooling off by 1 to 2 days, it's not the end of the world.
That's right. So, otherwise, they're rescinding.
Yeah, exactly.
And then you got to find a new buyer,
which is hard work.
It's getting better, but look, that's covered a lot of what I wanted to discuss today. Have you got any other case studies that might, be relevant that anybody watching may, have been in that scenario, or something you can sort of explain to people that might benefit them or help them out?
Yeah, definitely. So we touched on the commission one. That's something that a lot of people earn a lot of commission income. They don't necessarily know
bonuses and that type of stuff.
Correct. Self-employed applicants.
Okay.
I think there's probably a whole lot of misconception that I've just started a new business, I can't get my mortgage approved. Typically, the majors and the second-tier lenders want to see 24 months ABN trading. They want to see at least 1 to 2 years company financials and returns. There are lenders out there who will do low doc applications where you don't have any company financials. All you have is a couple of BAS quarters, and they'll consider the application based off 12 months ABN. So, self-employed applicants in one case had this lady. She was a first home buyer. She'd recently started a florist business. She had no idea about the financing side of things. As you said, she had a nice chunky big deposit. I think it was about 40 to 50%. She went in and she purchased this property without an approval. You then put me in touch with her, and I quickly realised, okay, her business has only been trading for about 13, 14 months. Straight away, the majors and second tiers aren't really an option. But because she had a chunky deposit, we were able to do a low doc application borrowing up to 60% and just use her latest 4 quarters of BAS to annualise her income. That meant that she saved her deposit because we could get her approval, but it also meant we could secure her really sharp interest rates as well. So she saved on the risk fee as well. So that was a good scenario. Another one that springs to mind is, so accountants, lawyers, medical professionals.
Okay.
You know, whether you're earning 100k, 200k, or even less, some banks out there will actually waive lenders' mortgage insurance for you up to 90% of the property value. So I had a client who had a 90% approval in place with a smaller bank. He only had the 10% cash deposit. He was introduced to me after he purchased. I was able to take him to one of the major banks who would waive the LMI for him. He ended up he borrowed 90% without having that LMI on top. He ended up saving something about $25,000. And that was all just because he was only dealing with one bank that I think his dad told him to get in touch with.
Okay.
So again, in that instance, it was just about knowing which bank has the sort of appetite for that type of income.
Yeah, yeah. And again, another benefit of going through a mortgage broker. You can just open up all those channels.
Correct.
And again, it's so varied, it's not just a one size fits all approach.
Everybody's different these days, so it takes a tailored approach. One more recent one that springs to mind, he was dealing direct with his bank. He'd exchanged unconditionally. It was actually about, I think it was about 10 days out from settlement.
Yep.
His bank turned around and declined the application. They had picked up some misconduct or some late payments on a credit card or something like that, and he was introduced to me about 10 days out from settlement. So we were able to lodge the application, get it approved in time, and settle within a week. So he was pretty screwed without having someone who was obviously A, knew which bank to take it to, B, had the relationship to be able to push it through, and then C, obviously just hold his hand, help him through the whole process.
Definitely.
So, because that's as stressful as it gets.
Absolutely. 10 days out from settlement.
Yeah.
You think you're going to lose your 10%.
Absolutely. Especially because, his bank had been dragging their feet the whole way through, and only 10 days out from settlement, then they decline the application. So, just a very difficult one and stressful for everybody involved. So that was a really good win.
I think, from my point of view too, working, if the buyer that I'm dealing with is using a mortgage broker, it can definitely having that point of contact directly, because generally if they're going through a branch, through their bank, we don't generally have that direct contact. Working with a broker like yourself, I can give you a call and say, hey mate, how's the application? Especially with these calls, when we're in the calling off.
Absolutely.
If we haven't had a call from a valuer, within 1 to 2 days after exchanging, that's obviously a red flag, because we need to get those valuers in there. So I think having that point of call with yourself as the broker, I think that can definitely, from an agent's perspective, and obviously giving their vendors, some peace of mind of being able to give that feedback, because sometimes we're in the dark and we just don't know what's happening, and we've just got fingers and toes crossed that everyone's doing what they're meant to be doing, and
without actually knowing.
Because look, you're obviously as a broker versus say somebody who works at a branch, is obviously you're incentivized to be getting the deal done in the shortest amount of time and to make sure it gets along the line. Whereas, somebody working at a branch, correct me if I'm wrong, they're probably, they're on a salary, and, there's just not that motivation there for them to...
Accountability at the end of the day. If the branch, but not to slag anybody.
But just from experiences that we've had, and there has been some great ones that I have dealt with.
But as a broker, if I don't get this across the line, I essentially don't get paid. So our interests as a buyer and the broker are definitely aligned. I can't walk away at any stage and just say, hey, I'm going on holidays. You know what I mean?
That's right.
The buck stops with me. The buck stops with me. So with us, we are more than incentivized to make sure we do a really good job for our clients, because at the end of the day, our business is built on the back of referrals.
That's right.
So if I do a crappy job, I'm not going to go anywhere. So.
And look, that's one, obviously you touched on the start, been almost 3 years, I've obviously referred you to a lot of my potential buyers and sellers, and some of those have purchased through me, some have purchased through other people, some have refinanced. We had that lady that we met down at Crystal Street last year who refinanced. I think you refinanced. She had multiple properties, and she was on interest rates from like 5 years ago or something.
It was the old I'm really loyal to my bank. They take really good care.
They're looking after you.
All it took was one quick snapshot to look at what interest rates she was on, and it was quite almost disgusting, because that loyalty didn't get her anywhere. She was about 1.5%, 2% too high, and a quick application later, she's saving, it was like close to 45 grand a year. And you know, she didn't have to do a thing.
That's huge. You can buy another property.
Exactly.
You can buy another investment property with that money.
And she thought she was being looked after the whole time. So
Yeah.
it is just being about putting in touch with the right people and educating people.
Yeah, yeah. Anything else you wanted to touch on, or?
Well, look, I mean, if you're a potential buyer sitting on the fence at the moment, interest rates have never been more competitive.
Yeah.
Banks are fighting tooth and nail for your application at the moment. So whether you're a first home buyer looking to get into the market and just want some education around how the whole process works, or you're an investor looking to sharpen up your existing portfolio, I mean, it's a very good time to be engaging a mortgage broker to get that looked at.
Yeah. That's mate, that's excellent. Well, you know, you've obviously looked after a lot of my clients in the past, and I've always got good feedback. So, mate, continue to do what you're doing, and I'll have Max's details below in the details section as well. So if you want to reach out to Max if you need any assistance, whether it's getting your pre-approvals in place, or you know, looking at your refinancing options, or just anything in general, you want to give him a call, have a 10-minute chat. You know, he's a knowledgeable guy and can give you all that information. But yeah, that's it, mate.
What a pleasure.
Thanks for joining me.
Really enjoyed
episode 2.
I feel like we're